What is going on, crypto peeps? Welcome back to the Traveling Crypto. Something a little different today, taking the show on the road. So I wanted to go over the top 5 mistakes that I see traders make frequently. And this applies to crypto, also applies to stocks, whatever, any market that you're in. These are the 5 top mistakes over the years that I've been trading that I see new traders make and that I've made myself some time back. What is going on here? LA traffic, man. So the number one mistake that I see, and this is, kind of a catch-all, is not having a trading plan. Not having a trading plan is the number one mistake that I see new traders make, and even traders that call themselves experienced, that have been in the markets for a while, right? They enter trades just based on a whim. Oh, I don't know, I'll just put 200 bucks in this coin or 300 bucks in that stock, not knowing when they're going to exit. Is it a long-term trade? Is it a short-term hold? Is it a swing trade? When are you going to get out? When are you going to take profit, etc.? Not having a trading plan, and not only with a specific coin, but your entire portfolio, right? What is your portfolio distribution? Is there a certain amount of risky assets, a certain number of risky assets that you're only willing to engage in? What percentage is that? Are you 20% risky, 80% blue chips, etc., etc.? So not having a trading plan overall, that is the number one mistake that I see. And one thing related to that I wanted to get into is, make sure you know the difference between abandoning your plan and altering your plan. So there are times during trading when you do have to alter your plan depending on the market factors and what the circumstances are at that current time, right? So say, for instance, this happens a lot in crypto because it's super volatile. Say that, for instance, you got into a coin thinking that it was a long-term trade, and all of a sudden overnight, the indicators that you saw were good, but you didn't expect it to shoot up 20% overnight. All of a sudden you're up 20% overnight, but you planned on holding that coin for a few months, right? Long term. What do you do then? Do you still stick to your plan of holding that coin long term, or do you then alter your plan and say, oh, I'm up 20%, now let me change my outlook on this coin? It has now moved from a long-term play to a short-term play. I'll take profits or set a rolling stop limit, so that if it does retrace, I protect my profits. You might jump back in later, but know when to alter your plan versus abandoning your plan. Abandoning your plan is when you lose hope and you just, throw your principles completely out the window. Number 2, the number 2 most frequently made mistake while trading is making too many trades. This leads to selling too early and buying too late. You don't want to be making too many trades. You jump in a coin. I've seen it on the Discord. And by the way, if you want access to the trade alerts, link is in the description. I've seen it on the Discord where traders get in on a coin. The coin, starts dropping a couple percentage points. They panic and get out. And then the coin rallies again. And then they want to buy back when it rallies, but then it's too late. So it starts dropping again. I know this sounds familiar to a lot of you traders. Again, this is not specific to crypto. Crypto is just more volatile usually than stocks, but this is, this applies to any market. You jump in, it drops a couple percentage points. You have that Vegas mentality where you don't want to lose money, so you kind of want to protect your funds. You jump out too early, then the coin rallies again. You have to allow your trades to breathe. You can't be making frequent trades in and out, right? If you have a plan and you say that you're only willing to lose 5% on a stock or 5% on a coin or maybe 10%, and you jump in and it drops a couple percentage points, and then all of a sudden you panic and you sell, that definitely is not an informed decision. And same thing on the buying side. You see a coin or a stock that's rallying, FOMO kicks in and you want to be a part of it, so you end up making too many trades where you're buying something that has already rallied or the rally is already losing steam. So making too many trades is definitely one of the biggest mistakes that I see in trading. Number 3, holding too many assets, whether coins or stocks. I see this a lot with clients that I tutor. You look at their portfolios and they're just holding like 17, 18 coins. It's not manageable. Like two things are wrong with that. One, it's not manageable. So you can't possibly manage 17 coins unless you got some super bot system that you've programmed. But you cannot possibly manually manage 17 coins, know when the targets are, you know, set up alerts for those. Is it time to sell? Is it time to buy? Do you take partial profits? Do you set a rolling stop? Is the coin tanking? Is it rallying? Like there's just no way to manage that many coins. And then the second reason you don't want to do that is because you wear yourself out too thin, right? If there are a few assets that you're following that have good indicators, you know, you don't want to spread yourself too thin, because then the rallies of the coins that you know you believed in are going to be diluted by that capital being held up in other coins that aren't rallying, right? So you definitely want to obviously tighten up your analysis, or rely on other people that whose analysis you trust, and get in on a few trades. You know, you can mix it up in your portfolio, have some long-term trades, have some short-term swing trades, etc. But you basically want to not spread yourself too thin. Number 4, and this probably should have been somewhere up. These aren't ranked, by the way, in order of importance, but this probably should have been somewhere up. You know, if it was ranked, it should have been somewhere up the top. But setting stop limits. This is, you know, it boggles my mind the number of traders that I see that don't even know how to set a stop limit. And even worse, if you do know how to set a stop limit and you're not doing it, then that's even more egregious, right? So that HODL mentality, I see this more with crypto than I do with stocks, although, you know, stock traders are also a victim of this. But this HODL mentality where you buy a coin, and this ties into not having a plan as well, but you buy a coin or a stock and you basically hold, you don't know what you're going to do with it. And even worse, you don't have a stop limit set. So when, you know, the coin starts tanking, you don't know when to sell. And it's not even when it starts tanking. A lot of times you'll see people, like for instance, in the crypto market, you know, people who bought in October, November of last year, even December of last year, and then they saw the rally up to 20,000. They didn't know what to do, right? They're like, oh, wow, I'm holding this coin, I'm holding Bitcoin, it's now up to 20,000. And they're just staring at their portfolio. The next week, 17, a few weeks after that, 15, a few weeks after that, 12, a few weeks after that, 9, and just no plan whatsoever. You know, no stop limits in place to sell. You can set rolling stop limits, either manually or using a third-party vendor like 3 Commas. But you could set rolling stop limits to where, you know, if the coin, say it does rally 25% and you're up, in order to protect those profits, you can set a -5 rolling stop limit from the current price that it's at. And the more it keeps rallying, the more you move your stop limit up. And that way, you know, if it does retrace, you protect your profits that you already made. You can partially sell, you don't have to sell your entire stash. There are different strategies and different ways to go about that. And if at any point you're interested in technical analysis coaching or trading coaching, link is in the description. Sign up for those one-on-one coaching sessions. So the 5th biggest mistake that I see in trading, and again, these aren't ranked, but this is kind of related to the last point, is letting losses mount. So there is this, you know, not just with trading, you see this also with exercise and nutrition, that say for instance, you know, you're on a diet, but then somebody brings a box of donuts to work and you eat one donut, then you get this almost this fatalistic mentality where you're like, oh, I ate one donut, that's it, my diet is ruined for the entire day, now I'm just gonna eat the whole box. No, there's a big difference between a 200-calorie donut and a box of 2,000 calories. So same thing with trading. If you're down 30%, you know, you get this fatalistic mentality where, oh shit, I'm already down 30%. That means, you know, I'm just not gonna set a stop limit and it doesn't matter. You know, I'm just gonna hodl and let the losses mount, no matter what those losses are. But there's a big difference between losing $300, you know, per 1,000, for instance, and losing $900. There's a huge difference, right? That's losing 3 times more your money. Oh, tunnel, whoop, whoop, whoop. I don't know how good the lighting is actually in this camera in a tunnel, so I'll just see once the video is edited and produced. But anyway, that is the 5th biggest mistake I see, is letting your losses mount because of this feeling that you give up because you're already down a certain percentage. And so what's the difference between 30% and 80%? No, that is entirely wrong. It's never too late to set a plan, right? It's never too late to institute proper trading strategies. The sooner that you start, the quicker you'll become a better trader. So definitely don't fall into that hopeless mentality that all is lost. That is it for this video. I hope that you like this format. As you know, I'm always on the road, I'm always traveling, so I kind of want to mix it up in terms of the environment that I record in, because it's hard to just isolate my videos to just when I'm at my desk at home, because a lot of times I'm not at my desk and I'm not home. So I hope you like this format. Leave a comment down below actually and let me know, because this is definitely the first, I might have done a video before driving. I don't know. I've definitely done a video at an airport, on a beach, at a hotel. So let me know in the comment section if you like this format. My main goal is to bring you the best trading content that I can bring you based on my experience. If you want access to the trade alerts, the link is in the description. If you want access to one-on-one coaching sessions with me, we do those over video conference. That same link is also in the description. It's just a different tier. Subscribe to the channel if you haven't already. Stay safe out there. Peace.